Hello, and welcome to this series of podcasts where I will explain to you the concepts of setting up, maintaining, operating, and investing within a self-managed superannuation fund. Now, to start off with, what do we mean by a self-managed superannuation fund? Well, I'm sure most of you, if not all of you, will know one or a few things about superannuation. Superannuation is a compulsory payment from an employer to your nominated superannuation fund. It's 9.5% of the total gross earnings in a pay period. And the employer usually pays that money every quarter towards your superannuation fund. Now, your superannuation fund is likely to be one of those large industry superannuation funds where you will not have a direct control over what the fund invests in terms of its assets, more specifically. What you do have control over is whether you choose to invest aggressively or conservatively, or a mixture of both, or somewhere in between. Now, you might be thinking then, how can I have control over specific assets that I want to invest in? Well, throughout this series, I'll be explaining the concept of self-managed superannuation funds, what it does, what the advantages and disadvantages are, what the taxation implications are of having and setting up and maintaining a self-managed superannuation fund, and some things that you as trustees would need to be wary of and what you need to look out for, because there's a lot of compliance issues and regulations that you need to maintain in order to run a successful superannuation fund. Now, please bear in mind these podcasts do not substitute for financial advice. Although I am an accountant and experienced in helping clients set up and maintain their superannuation funds, I am able to provide general advice in setting up, commencing, and maintaining a superannuation fund specifically fit for yourself. However, I am unable to provide any type of financial advice because I don't know what your financial requirements are. I don't have that financial advice license, but I can provide you advice in terms of taxation implications and consequences of maintaining a self-managed superannuation fund. I can also provide general advice in how to commence, how to set up, how to maintain a self-managed superannuation fund, and I can also provide general advice in terms of pension payments. So if any of you out there are at pension age, you might be thinking that it's worthwhile to commence a self-managed superannuation fund and to commence what we call a pension account. Now, these terms and phrases may seem very strange to you at the very start, but throughout these podcasts and hopefully at the very end of the sessions, they won't be strange phrases for you. So this is just an introduction on how to commence a superannuation fund and how to properly set up a superannuation fund and keep it running in order to provide the maximum benefits for the members. Now, how do we set up a self-managed superannuation fund? And what are the steps required in order to do that? Well, there's online, there's websites out there available online that do provide a service where you can go and have a look at setting up a self-managed superannuation fund. The website has solicitors where they create the super fund trust deed for you and create all the necessary paperwork and documents that enable you to have a self-managed superannuation fund. Now, you also need to consider who will be the trustee or the trustees of a self-managed superannuation fund. I'll guide you through that in the next episode. And you need to consider also what assets categories your superannuation fund wants to invest in. So these will be explained in the coming podcasts. Now, just by way of introduction, a regular superannuation fund is regulated by the Australian Prudential Regulations Authority, APRA. So your industry funds and the funds where your employers are contributing your money into is regulated by APRA. If you would like to transfer all of your superannuation money from the large funds and commence a self-managed superannuation fund, you need to bear in mind that your self-managed superannuation fund will now be heavily regulated by the Australian Taxation Office, the ATO, or the Tax Office as a short name. Now, the superannuation rules are still in place. The same rules are in place as they would be in place in relation to your other industry super funds. But you are the one who will be responsible to comply with those rules if you do set up a self-managed superannuation fund. That way, your other funds will not be responsible for maintaining the rules. Your fund and you as a trustee will be responsible for abiding by the SIS Act, or Superannuation Industry Supervisory Act. Now, you can maintain these rules by simply going to your accountant or tax agent and asking them for assistance in helping you set up your superannuation fund, maintain it, and have it in a status where it complies with the SIS Act. Again, SIS Act is known as Superannuation Industry Regulations Act. So your accountants and tax agent will be able to provide advice for you in complying with these regulations. However, you have a duty in order to provide the maximum benefits to the members of the superannuation fund and to be able to demonstrate that your self-managed superannuation fund can provide you with a better benefit in the long run than what an industry super fund can provide for you. So this is just a little introduction on superannuation and setting up self-managed superannuation funds. Over the next few podcasts, we'll speak about how to set up a self-managed superannuation fund, or SMSF, and how to invest in your SMSF, and what things and items you need to look for in order for the SMSF to be able to generate you with a better return than what a normal industry fund will likely return to you. So stay in tune for our next podcast, which will outline steps required to be taken in setting up and maintaining a SMSF.